Good morning, everyone, and thank you for joining us on Morning Markets. It's Monday, the 22nd of April, and today we'll be looking to the week ahead. Just looking back to last week to start the conversation, it was certainly a week where more positive economic data continued to collide with expectations for changes in interest rate policy. And that certainly just continued that little bit of volatility that we've seen in asset markets, both equities and sovereign bonds, since the beginning of April. And this week will likely be similar. We don't have as much economic data that will speak to those points, but certainly, particularly in the US, there will be two data points that people will be looking at in particular, that of gross domestic product and also personal consumption expenditure, or PCE inflation. If we think about GDP, certainly the key thing in the US has been the resilience of growth, which is a great thing from a markets perspective and also from a broad economy perspective. And we'll get some indication of that with GDP being reported. Certainly the market looking for a number that's not as strong as that which we were seeing towards the end of 2023, but certainly a number that remains above trend, so 2.1% GDP growth on an annualized basis expected. If we look at inflation, certainly over the past number of weeks we've been talking about CPI inflation in the US and how that has consistently surprised ahead of expectations, so that's negative, i.e. inflation being higher than expected. The PCE measure is the Federal Reserve's preferred way of looking at inflation because it's much broader and captures a lot more areas of the economy, and we'll see how that progresses as the week comes through. If we look then to the US as well and think about the corporate reporting season that we're in, this is a very big week for corporate reports. And indeed there we've a number of the so-called Magnificent Seven reporting as well. So certainly a lot of eyes to see how these companies continue to navigate through the growth backdrop that we have. If we look over to Europe, relatively light week of data, much more sort of on sentiment surveys, the PMIs in Germany, the IFO. These things will all just continue to bring together this view that manufacturing activity is bottoming out, but really not yet showing any material sign of recovery. In the UK, I think results will be in focus with a number of our high street banks reporting, and certainly we'll be looking to see if they indicate any of the similar trends in terms of their net interest margins that we heard from their US peers. Asia this week, well, already this morning we've heard from Chinese central bank in terms of their lending rates. No change there, very much as expected. We also have the Bank of Japan. Again, probably not expecting any change given the quite material changes that happened last month. But I suppose the focus there will be on what they say from a broad forward-looking perspective and how policy may evolve in the months to come. I'll leave it there for today, but please do join us on Morning Markets throughout the course of the week when we'll keep you updated on those key events.